Hey, this is Sasha. Thanks for joining me in today's video. And what I want to share with you today is basically how much money can you make when trading options. So if you're brand new, just getting started, stay tuned. I'm going to share with you some insight right here in this video. All right, so one of the things I'm doing right now is we're launching and getting ready to launch. Actually, by now it might have already launched as you're watching this video, our new course called Options Mastery. This is the foundation course. This is version 2.0. So the whole course has been reworked from the ground up. The original course was 3 DVDs or about 3 hours long. This one's about 11 hours long. So you can get that at our website by just going to tradersfly.com, or you could go to the course website, learn.com. And when you get there, right here at the top, you'll see a discount code as well, or you can scroll down, click the link, and then it'll put a discount code right there at the top. Right now it's launching, it says it's launching November 25th. But if you go ahead and are on our newsletter list, you can definitely just go ahead and get this at a discount, or just purchase it before December 25th, right there at Christmas time. It's a good way to remember it. So you get a couple weeks, at least from the time of this recording, to be able to go ahead and get a promotion. But once the promotion deal is done, it's done and over, just like with anything in life, right? In any store. So this course is 11 hours long, but 36 modules. We're going to release it in 3 sections. So November 25th is the first batch of videos. December 2nd is the next batch. We're going to look at much more risk profile pictures and a little bit more intermediate things for the basics. And then December 9th is going to be kind of looking at some of the spreads and the constructions and the basics behind spreads. So that's what we're going to cover. And you know, everybody always wonders, hey, how much money can I make when trading options? And that's kind of why we're getting into this video, is because of this course. So if you're interested in this course, go ahead and click the link in the description, or go to visit one of our websites right there. You can pick this course up, and you can definitely get it also with a little bit of a promotion here if you get it the first couple of weeks of the launch. So, okay, so let's get into kind of how much money can you make. And I think it's important to understand really how you allocate the trades. I think a lot of people, what they do is when they watch things like on YouTube, or they're just getting started, you get funneled and bombarded with a lot of speculative trading, speculation, right? The game of speculation. And there's a lot less and a lot fewer things like long portfolio or long investment things. Yes, there might be some videos you're seeing, hey, long investment, like buy a stock, hold it for 10 years, but then you just make one video and then you're kind of done. So a lot of those, let's say YouTube channels or YouTube videos are not out there because, hey, you just bought your stock, you're done, and that's it. They're not around anymore. But everything is kind of focused around the speculation area. And the speculation area is kind of where you're doing active trading. This could be kind of like day trading, swing trading, you know, and that's fine and dandy. But remember, this is part of your total asset allocation. So if you've had maybe $10,000, this is maybe only 5 or 10% of that. So it's not a large chunk. This is a little bit of a larger chunk, but it has a lot less risk. This is kind of like holding an investment. Now in the options world, this just means, hey, we're making money from stock appreciation. This is medium portfolio. This could be like a 30 to 60 day trade. And this means we're making money from theta, or time value. And this is maybe we're making money from a direction on our opinion or idea. Whereas long portfolio, you might say, what's the difference between long portfolio and maybe speculative? Well, long portfolio, you're kind of doing the same long directional trade for maybe a year or a couple of years. Whereas a speculative trade, it might be just a one-off trade. Think of it like, hey, this week Netflix looks like it's going to break out, and then you just go in and you do it, and it's a one-time trade, and you don't do it again for maybe 3 months until you see support, resistance, or the technicals line up. So when you look at all of those things, this kind of creates some of these risk levels. And by the way, some of these slides are actually from my mentoring program that I do. And if you're interested in the mentoring program, that's where I work with you one-on-one for like 6 months plus, and you can check that out on our website here, mentoring for option traders. So there's a lot of great stuff there. Anyway, so when you look at this, you have the highest risk in speculative, but you might be making way more. Why? Because the direction has to go in your favor. and you might get time decay. So you might make, who knows, maybe 50% return on a single trade to 500% return on a single trade. So that's a speculative kind of trade. It could also be much shorter duration. And with shorter duration, you get much more bang for your theta. You get much more time value going in your favor. Whereas a long portfolio, think of it like buying stock. You don't know if that stock's just going to hang out, move sideways for a while, and you're not really making a lot of money if it's moving sideways. You're just kind of long invested. So if you're doing things like, let's say you go ahead and let's put on NVIDIA real quick here. Let's see if it'll populate these trades. Maybe it'll take a minute here. Let's see if we can do SPY or SPX. So like here's maybe SPX, and we're doing a diagonal. Now, yes, you make a little bit from time decay, but really this trade, this diagonal, it's a bullish diagonal, and you're really trying to make money from an appreciation. So that's really kind of the difference on the long portfolio. So you're allocating a different amount of cash in long portfolio, medium portfolio, and speculative. So combining all those things, what is it that's possible? Well, it really just depends on your risk levels, right? So if you do shorter term duration trades, right? If I do a trade that's maybe a 10-day trade until expiration, like a butterfly or an iron condor, I might make much more from the time decay and time value than a 30 or 60-day trade. So all of a sudden, your profit potential goes extremely much more elevated. It becomes bigger. Whereas also if you do something more directional rather than, let's say, kind of non-directional. So if we go ahead and put on something like, let's go ahead and put on 3550 over here, non-directional, where I'm mostly making money from right here, and we'll take a look, theta, okay, where I'm not looking for this stock to move. So if I'm looking for something non-directional here, well, again, the same thing is that, hey, in this case, I might not make as much money as something a little more directional. So think about it. If I had something directional and short duration, all of a sudden you could make a lot more. So let's go ahead and analyze another trade. So let's say I go ahead and change that to a calendar, and let's say we move it to 3,700. Well, all of a sudden I'm using way less capital right here. I'm only using $159 on this trade, whereas this trade over here, I'm using $295 for a calendar. So 195 or 160 here is way cheaper, but I got to have it move, and then the time decay will start, kicking in as well. So that's the point, is that if you have something that's directional and short duration, you can make a lot of money, but now all of a sudden you got to get all of those things to work in your favor at the appropriate time. Here, let's spread this out a little bit. Let's go to December 18th here and just show you the difference. So here, this trade here would cost me $548, whereas the one that's kind of at the money would cost me double that, $1,000. So think about it. If you could use less capital but kind of make more, then obviously your percentage of return is going to go way up. So just to show you a couple of quick examples, like here's a calendar that if you go ahead and invest about $1,000 into this on the SPX, and it just kind of hangs around in this area for a couple days, on $1,000 you can make about $120. So that's about 10% return in just a handful of days, right? So it seems good and attractive, but again, keep in mind these are kind of non-directional trades. And if I did shorter duration, if I compress this duration, or let's go the other way, let's go longer duration. If I go like April 21st, and this one was like February. So looking at this one, a couple of days, I might make $115, but I'm going to be using $4,000 of capital. So I'm tying up a lot more capital. So my percentage of return is a lot less because I'm doing a longer duration trade. So it's important to recognize what is it that's possible and what risks you want to take on. I will say on average, kind of people that are trading and just getting started after the first year and kind of know what they're doing, you could look to make anywhere between 3 and 7%, somewhere around there per month. Some trades you might make way more, other trades you might make and lose on some. but it really just kind of depends on, hey, what type of trading are you kind of doing? So if you're doing more safer stuff, longer portfolio stuff, I have some people that just focus specifically on this, then you'll make a little bit less return because it's the lower risk. Whereas if you're doing something more speculative, you can really ramp up your earnings potential, but again, it's more difficult to manage. It's you got to be on top of things, and sometimes it's a little bit more of a guess because you need the direction to go in your favor. So anyways, so this is just an example with, let's say, a calendar here, but let me see if I have any other examples. Here might be Apple. Let's see, what do I got here? Here's an Apple trade that's close to expiring. This trade uses $2,500 of capital, and you're looking to make about $438, or at expiration about $500. So $500 on about $2,500. So that's pretty good return. Let me see. Here's an Amazon example. So this one's a little bit unbalanced, also an iron condor. This one uses more capital, about $12,300 of capital. And of course, the return now is a lot higher than the Apple one. So it's about 1,465 at the moment, or a max of 1,700. Let's see, here's a diamonds one. This one is a little bit at a loss right now, but you can see that it moved away from our kind of at the money point, and it's losing about $300 on a capital of about $9,000. So using $9,000 of capital, losing about 300, it's not too bad. Let's see, here's another one, DKNG, also at a little bit of a loss, but I'll show you what it looks like. So here, actually, probably by weekend time or after the weekend, it'll be more profitable. But you know, it's about breaking even about $63 on $3,000 of capital. It hasn't evolved far enough yet in time or movement. Here's a Facebook example, just to show you different types of trades. Also an iron condor for now, $2,612 of capital used, and as it expires, it should be around 388, but right now it's $341. Here's a gold example. This is not an iron condor. This is kind of a butterfly and a diagonal. So I have a couple different things on here, kind of to hedge and protect. So this diagonal is making about $300 on about $2,900 of capital, so about 10% there. And then I have a butterfly position here, which is basically breaking even. It's not making anything right now because it's right here. We're at zero, so it's not doing anything there. So those are some of the kind of earnings that you could kind of expect as far as you put on some trades. But it depends, of course, on your risk levels and tolerances, right? Some of those trades are a little bit shorter duration, some are longer duration, some are a little bit more directional. And if you have a directional trade, now all of a sudden you have to use less capital because you need price to go in your favor. So that means you can make more if the price has to go in your favor. But the downside, of course, is now price has to go in your favor. So I hope that gives you a little bit of insight what's possible. In general, like I said, 3 to 7% is kind of what you're looking at, maybe 5 on a month basis, but it really just depends on the risk you want to take on. I have some people that are really into speculative trading and they just want to do that with options. I have other people that, you know, focus on theta and money every month kind of thing. So they're collecting their premium from time decay. Other people that are doing kind of a long portfolio thing where they're just a long investor, but really combining all three of these will help kind of reduce your risk, where you got a mix of trades, kind of like having a mix of investments. And when it comes to option trading, that's kind of what you want to do. So you want to have a little bit of a mix and allocate a little in this bucket, a little bit in that bucket, and that should help you kind of you know, spread out the risk amongst different areas and sectors. So anyways, I hope you found this video helpful, insightful, gave you some things to think about. One last reminder as far as our course goes, definitely check that out on our website, tradersfly.com, or go to rise the number 2 LEARN, and you can go ahead and check out this course, Options Mastery Foundation. Scroll down, there's going to be a link in the description, or just go to the website. You can also go to our Traders Fly website. And if you're interested in coaching and mentoring, definitely go to our coaching and mentoring section. And if you want me to work with you kind of in a little bit of a one-on-one and group settings, then check it out. It's definitely worthwhile. So anyways, thanks again. If you're brand new, feel free to check out some of the freebies as well that we have on our website. Subscribe to the channel, or just continue watching other great videos. Remember, do what you love, contribute to others, but most importantly, live life abundantly. I'll see you in the next video.